Hello, and welcome to episode 27 of the Mo Money podcast. I'm your host, Jessica Morehouse. Thank you so much for joining me today. Very excited to talk to my next guest. His name is Aman Raina, and he is an investment analyst and investment coach. And it's kind of cool, actually, how he ended up on this podcast, because he was reading my blog. Thank you. And he commented on a post, I think that the post that I was talking about, thinking about becoming a money coach. He commented on my blog, got to chatting, and bam, he's on my podcast now. So we're going to be talking about how he went from working in the TSX to being his own investment coach. And the difference that I think, the reason I kind of wanted him on the show is to explore what an investment coach means. It's not an advisor. And I think that's kind of where people get a little bit confused. An investment coach more teaches people about the fundamentals of investing and, personal finance, so people can use those tools and be smarter investors themselves and not have to rely on an advisor to do all of that legwork. So I'm very excited to talk about all of this cool stuff coming up. Thank you, Aman, for joining me on the show today.
Very good. Thank you for inviting me to your pod.
Your pod. Yeah. Thank you so much. It's great to have you on the show. And thanks for reaching out. The reason that I asked you to be on the show, as you remember, is I wrote a blog post about money coaching because it's something that I'm interested in pursuing down the road. And you commented on my blog and I'm like, this would be a good guy to chat with on my podcast. This is perfect.
Sounds good. Yeah, definitely.
Yeah. So let's kind of just jump into it. It seems kind of from your career timeline in school, you were always pretty interested in investing in personal finance, but kind of how did you get interested in that?
Oh boy, my journey is probably a lot different than a lot of other people that have kind of gone down the road of finance and personal finance. It all started off, nicely in that, I went to school and did my undergrad in commerce, and I specialized in finance and accounting. So I took all the courses you needed to do to be a good little finance boy. Mm-hmm. Your standard corporate finance and your tax courses and all your accounting courses, reading financial statements and everything like that. Did it, went there, did it, done it. And after that, after I finished my degree there, I decided, because I thought it was a good time while a lot of things were fresh in my mind, I jumped on board and did the securities course, the Canadian securities course, so which helped quite a bit in terms of understanding a lot. It was just easier to do at the time, a lot of things fresh in your mind. Mm-hmm. And so when I finished it, actually, then my road kind of changed a bit. And I thought I would get into finance and that side of it. But I found that my first job that I got out of university was more, I was doing some basic cost accounting kind of stuff. Mm-hmm. And I was working in Ottawa too. Mm-hmm. I got a basic contract kind of job. Mm-hmm. And it was just during that time, I had a chance to dabble in some programming and some programming and developing some kind of software and stuff. And I go, so I knew nothing about any of this stuff. So I was just totally okay, sure. I'm out of school. I'll just give it a go, see how it goes. But it was a really, matter of fact kind of chance thing that I thought, this is really cool. If I kind of and I was able to put together a little dorky little Excel program that I could give to a bunch of engineers, and they could figure out how to cost a bunch of manufacturing processes and stuff. And so at the time I thought, what, if I could combine, if I can get a little bit more training on how to be a programmer kind of thing, I can understand the technology side, combine it with the business, my financial knowledge and everything, that, I could probably get a good gig out of that. Yeah. So I went back to school. Mm-hmm. And I did one of those little 12-month kind of IT kind of diploma kind of things. Yeah. I learned a lot about programming and stuff. And that's kind of how I ended up, when I finished it, the first job I got out of it was with the Toronto Stock Exchange. Mm-hmm. And so this was at the time, if anybody remembers, when there was actually a trading floor. If you remember the whole Wall Street, Bay Street kind of vibe, where you had a trading floor and there was a whole bunch of people yelling at each other and swearing at each other and buying and selling stocks, just like our like our parents, would know about it and stuff. And so at the time when I started there, I got a chance to hang out on the trading floor. And this was the time when, if you remember, and if your viewers remember or your listeners remember, everything that happened with Briax, that stock, which was like one of the biggest, everybody wanted to own it. It was like a gold company. Let's say they discovered this huge mine in Indonesia, and the stock was just flying. It was going from like 50 cents to like $50.
Wow!
And it was the Nortel-ish kind of.
And what
stock.
What year did that happen?
That was probably 1997, 98. So that was the time, and that was my first job, really working on Bay Street and everything. And it was a great time. But it was at the time the trading floor was there, but then they were starting to wind it down,
right?
Because everything was becoming about automated trading and technology and that kind of stuff, and it was less away from the human trading aspect of it. But it was my first, that was my foray into it. And when I got into it, you kind of like get into the vibe of the whole scene, and I thought, I really like this kind of. I'd really like to, being around that environment and being around the investing environment. I thought I'd, try to learn a little bit more based on leverage stuff that I learned from school. And try to start investing for myself. And so I started trying to look around for information on financial research, on on companies and stocks, and how to pick stocks and stuff. And it's quite the best place to do that was the Toronto Stock Exchange.
Yeah, absolutely. I can imagine.
You're like got everything there for you at your fingertips. And but what I found though was a lot of that information and research that you found out there wasn't very credible.
Okay.
There was a lot of biases, and I was just seeing there's a lot of biases and conflicts that you find when you see analysts write reports and things like that. And I didn't feel comfortable with a lot of the information that I saw out there. And I said, there has to be a better way. There has to be a better way to do this. And so then I kind of flashed back to when I was in school at my last year in university, and we had to write a project on a financial and investment concept or topic. And so I picked one. And it was called, I found it on Fortune magazine, and it was all about economic value added. It's just another way that you can use, another measurement that you could use to measure the true performance of a company. And the cool thing about it is it filters out a lot of the accounting hocus pocus and mumbo jumbo that you can use to manipulate your earnings and profits. And it gives you a much more pure assessment of a company. So I wrote a little dorky report, analyzed a bunch of companies, and gave it to my prof. And he told me, nice report, Aman, but it's probably just a fad. It's not going to amount to anything. So whatever. I got my mark, right, and all that. So I moved on, and then flash forward my time when I was working at the Toronto TSX. I was in the library doing some research on some stuff, and I came across a report in a financial journal talking about economic value added, and it was talking about how it was like one of the best ways to value and measure a company, and it's a much more effective way of picking stocks using this kind of format. And it was written by that same professor.
Did he rip off your essay?
And you know what? I sat there and go, this guy just steal my gig.
Oh my God.
And I was just like, really?
Wow.
You gotta be kidding me. So at first I was like, okay, that's really bizarre.
Yeah.
But then the next thing I thought, over time, I just realized, you know what? I'm having a hard time finding really cool, credible research or investment data or investment information. So I started taking that stuff that I learned, kind of polished it up a bit, and I kind of built up my own little database of companies, specifically, Canadian companies, because that's, where I was interested in at the time. And I built up a pretty big database of a lot of Canadian companies, most of the companies on the Toronto Stock Exchange. And it was at a point, like several years later, I just sort of decided, you know what, like I've always had something, a fire in my belly to go out and do something on my own type thing. So after a few years, I basically decided, you know what, I'm going to take a shot. And I basically went out on my own and kind of quit my job, essentially, and became my own, hung on my own shingle and started my own little consulting company, really.
Wow.
Specializing in investment research, investment analysis. And so I was doing quite a bit of work. selling my research and working with individual portfolio managers to, they're looking at doing specific analysis on different industries and things like that and companies. And so I would kind of help out and give some analysis and provide some analysis on that, and which was cool.
Yeah.
And it was kind of like, that's kind of what I wanted to be into and what I wanted to do. So I thought, yeah. But then over time, I just, when I was working, most of my work that I was doing was more with the institutional side of things.
Right.
And, but I would always get questions from people, just, run-of-the-mill people about, they would be sharing their experiences with me on how really they've been getting kind of screwed and ripped off by their advisor or by a bank, and their investments haven't been doing well, and they've been struggling, and they're just kind of drifting along and not really feel like they're having any control or any, a goal or an endpoint with what they want with their investment. They're working hard. They're saving all their money. They're trying to do the right things.
Yeah.
And at the end of the day, they're going like, I'm not getting anywhere with this stuff.
Yeah,
and
I'm sure that's a sentiment that a lot of people listening right now can agree with, and myself included. There's so many times where I'm like, I feel like I'm doing everything right, but then I look at my investments, I'm like, what the hell? I feel like they could be doing better.
Exactly. And so, I was always getting these questions, and, I would do my best to kind of, answer it and try to give them some kind of, direction on how to do things and stuff. But, my focus was still really on the institutional side. But over time, then we had, in 2000, we had the .com disaster, and then we had the Asian crisis. And then, in 2008, we had the financial crisis, and, stocks of getting, there's just been crisis after crisis after crisis, and people's portfolios have been shrinking and shrinking and shrinking. And it's just over time, I just noticed just people are just feeling so exasperated and helpless.
Yep.
And you're saying, how do we change this? And what you've been seeing now over the last, since maybe 10 years or so is just that emergence of people just saying, you know what? I'm not getting anywhere with the status quo, and I need to start empowering myself and doing this stuff on my own. And I need to whether I need to go out and read a book or take a course or go read a bunch of blogs or get on the internet, and just people are just now have been really empowering themselves to learn and make investment decisions for themselves.
I agree.
And that's a trend, and it's continuing, and I really don't see it changing any different. So that's kind of like a little bit of the dynamic of the environment, sort of like how the world's kind of evolved a little bit in maybe the last 10-15 years.
Absolutely.
Bringing it back to me, I guess, I'm just the guy doing, as I'm seeing all this, I'm going to myself, I'm, as my career evolved, I kind of was working on the investment research side and consulting side, but I was also splitting my time also being as a manager, as a project manager, doing some other stuff too on the side. And being a manager, you're in the people business, right? You're engaged with people, and you're kind of developing a lot of the goal as a manager is you want to get people to do things, right? And do things in a productive way. And there's the, take out a whip and whip people into shape to doing things, that management style. But then there's also what I've learned over that side of my career is that you can get people to do a lot more things through building relationships with them and developing kind of a coaching relationship with them, where you're not necessarily telling people, yo, go do this kind of thing, but you're kind of enabling people, engaging them, providing support, whether it be emotional or technical kind of support, to getting people to do things that they need to do. And so over time, I just kind of realized as I was building up this competency or this kind of skill set and seeing people struggling really with their investments and trying to make better investment decisions, I thought, you know what, maybe there's a way that I can leverage both kind of sides of the skill set, bringing kind of mending sort of the technical side of teaching people how to make the mechanics of investing, and combine that with sort of like building a mentoring kind of relationship through coaching that will kind of make people more aware of their behaviors with respect to how they make their decisions. And I thought, if you can combine those things, I think people can it'll first of all empower people more, and I think help them make better investment decisions. And so over time, I kind of sort of tweaked my approach and whittled myself away from the institutional crowd, the Bay Street crowd, and really started focusing more on individual people and groups that were looking that were investing, but kind of needed somebody to kind of have that third party to bounce ideas on decisions that they're facing. And that's kind of sort of the genesis of all the kind of investment coaching concept that I've essentially developed. And so I sort of morphed my practice away from investment research, but now to what I do now, which is investment coaching.
Which I think is awesome because, like, I completely agree with you. I feel like in the last decade, people are becoming more curious and trying to teach themselves and learn more about personal finance and investing because, let's be honest, most people are kind of unhappy with all these financial crises that have happened. They are seeing that they're not getting the bang for the buck that they thought. And they, usually, back in the day, you were able to go to a normal institution and invest your money with a financial planner and you would be able to see results. But now you aren't. And you're like, what am I using this guy for? I should, and why am I, maybe I should take the time and the energy to actually teach myself so I can get results myself.
Yeah, and that's a question I always get back when I tell people what I do, and they say, well, I can just go to, Indigo and there's like 500, investment books or personal finance books, and there's the internet and a whole mountain of information you do that. And and you can easily do that. I say, you know what, you're absolutely right. If you're motivated and committed and you've got the time for it, you can do that on your own. But a lot of times, a lot of people who are still venturing out on their own, they still need some kind of human interaction in a sense.
And a guide. Like, I think that's definitely key. Like, sometimes when you're starting something new, like an education in personal finance, and you really don't know where to start, it's nice to have someone to be like, here are the starting points, here are things to consider, to kind of just make it the transition a little bit easier so they don't feel overwhelmed. And I think that's kind of the scary part about personal finance is it can be overwhelming. Yes.
And see, the thing about personal finance, I almost think like, I tell people like, personal finance is almost like the Game of Thrones. When you think about it, I don't know if you're into it, but
I love Game of Thrones.
like to me, like in Game of Thrones, you have King's Landing and you have Winterfell. You have all these little places, right? And there's so many of these places. And there's so much stuff going on in all these places. There's so many moving parts that trying to piece all together how all that stuff works is really hard. And to me, like, personal finance is like, essentially it's three kind of kingdoms. It's your saving kingdom. It's your debt management, your budgeting, debt management, I guess, kind of kingdom. And then there's your investment kingdom. And they're kind of moving parts. They're all like moving parts. And it's really hard to kind of juggle them all in a very seamless, interactive way.
Yeah, it's very hard to find that balance. And that's like, I think, just like an everlasting struggle. You'll always try to find balance, but sometimes you'll find in life that you're more focused on saving and investing, or investing than, paying off debt. It's hard to kind of have everything working at the same time, seamlessly.
And they're very complex disciplines on their own. Like the whole saving discipline is a whole like concept on its own. It's a very vast and very intricate kind of process. Investing is a whole world essentially of concepts and ideas and theories. Debt management is a whole other concept of, concepts and ideas and disciplines. But what unites them all is essentially behavior.
Absolutely.
And one of the key things, in my time now being a coach is when I started doing it, I was really more about the mechanics of everything, like, how to read an income statement, how to read a balance sheet, how to calculate a debt equity ratio, how to do a discount cash flow valuation. Great. But at the end of the day, what really screws us up is really our behaviors, our emotions, our biases that we all inherit that can cloud our judgment and make our decision making a lot harder. And as an investment coach, what I do is I try to make people at least more aware of their behaviors, so they can not necessarily eliminate them, because it's impossible to eliminate these biases, but but you're able to manage it better.
Exactly.
And
it's good to be aware.
Yes, because if you can combine the technical number crunching, whatever you want to call it, side of investing or debt management or saving or whatever, with the emotional side of it, and have that awareness, I think that's your secret sauce.
Totally.
And that, I think, will separate it. Does it guarantee success? No, but I think it puts you in a much better position to achieve success. And at the end of the day, it's about empowerment and not being dependent upon other institutions for achieving those goals.
I totally agree. And that's one of the, I think the reasons that I've been so interested and passionate about personal finance for so long is because once I started educating myself, I realized how powerful that education was, and I felt more in control of my life. And personal finance is a huge, huge element of your life. And once you feel like you've got an understanding and a hold on that, it kind of, I don't worry about money. I tell that to people all the time. Like, I don't worry about my money because I understand what's going on with it.
Right.
And it does, evolve and change. But because I have that solid foundation and I think about it a lot, I write about it and talk about it a lot, it's not like this weird foreign mystery anymore. It's like, I got it. This is okay. And I can roll with the punches a lot easier.
Yeah.
One thing I am curious about, since you have been in the game for a while, and you've helped quite a few people, what are some of the most common questions that people ask you that they want to learn more about?
Oh, gee. How much time do you have? The questions, the type of, it's not questions, it's issues. It's decision making, it's decision points, right?
Okay.
And that people face. And it ranges really from someone who's just, finished school, got their first job. They've now got a little bit of cash now that they've been able to save, and they want to start investing. And so I will get questions, or people are faced with that decision, is like, how do I get the ball rolling? And so what I usually do in that kind of case would be, for people that are just brand new, spanking new. What I do is I've developed some modules, some learning modules. And what I do is I kind of spend time with them, kind of essentially teaching them some of the core fundamentals of investing in terms of how you make those investing decisions. And it really starts off with just understanding our capitalist system. And understanding, like, how do companies and individuals become wealthy? How do they make money? Because I think we live in a capitalist society, but I think we use the term so loosely we don't even know what it means. I know. And it's kind of crazy to me still that, this is such a huge part of our lives, and it's not taught in schools. But anyways. It's taught, but it just doesn't jive with us at the time. Yeah, that could be it. So, like a lot of things. For me, it was chemistry. That didn't jive with me at all. Accounting, maybe I think it clicked with me a bit there. But it's like I would just, in that kind of situation or that kind of decision point, I would walk them through understanding the fundamentals of how a company starts, how it, raises money, and how it raises capital, and how it invests that capital, and ultimately how it makes a profit off that capital. Because ultimately, when you're investing, when you're buying a stock, you're buying a business, you're buying a company, and you're buying people behind that company. And you need to have that, at least, and you don't have to go get an MBA to figure this out. You just need to have a basic fundamental understanding of how wealth is created. Because if you got that as a foundation, then when you start adding some layers to it in terms of understanding some of the metrics involved about it and be able to pick off some metrics from it, then you're going to be able to understand, hey, you know what? Apple, that's a pretty damn good company. I think I might want to look at that. And so it's about laying that foundation. So that in that kind of situation, that's what I would do and with a beginner. But at the same time, I'll get people I'll get a situation where I've got somebody who's 3 years away from retirement, and they've got a pension. They know they're going to get a pension, but they're unsure about how to. They've got a TFSA, and they've invested in a bunch of mutual funds or stuff like that, and they don't feel very comfortable with them, and they're working with an advisor or something, and they would come to me and basically ask me, can you just take a a second look at this and see, does this make sense? And the thing about coaching is it's not like I'm going to go and say, you know what, this is garbage or this is good, this is bad. It's about kind of walking them through the portfolio. And at the end of the day, I want the protege. I call people proteges. Yeah. I want the protege to kind of have the aha moment and say, you know what, this doesn't make sense what I'm doing. Or, oh, no, this is a really good thing. I think I'm on the right track. And so what I do in the conversation that I'll have with them is I'm going to ask them some questions about their individual, their components that are in their portfolio, walk them through some fundamental issues that they need to examine and that they may need to follow up with their advisor, questions that they may want to ask them. And it's really through that kind of interactive exchange that ultimately I want the protege to be able to define the answer themselves. And that's really one of the fundamental differences between a coaching kind of relationship and the advisor relationship is an advisor is going to tell you what to do.
Right.
They're going to say, Jessica, go, put 20% of your money into bonds, 80% of your money into stocks because your risk profile is X. Here are the stocks you should buy. Here are the mutual funds. Here are the ETFs you should buy. That's the advisor kind of relationship. A coaching relationship is where I'm essentially going to, first of all, give them some basic knowledge in terms of literacy, in terms of understanding what the various, what an ETF is and what you need to look out for when you're evaluating an ETF or a stock or whatever. And really at the end of the day, it's the protege is the one that's going to make that decision.
Right.
So I'm not telling them they should do this. We're having that conversation to facilitate and flesh out things that they think are ultimately going to be important. Because at the end of the day, they're accountable.
Yeah, exactly.
They're accountable for the decision that they take and the path that they take. They're accountable for it. And through a coaching conversation, it really creates more empowerment for people. So that's kind of that's those type of questions. Another question I'm getting a lot recently is to do with because of the Canadian dollar falling.
Yes.
It's made a lot of people kind of people have had a little bit more hand wringing. They want to invest in like U.S. kind of stocks, but the dollar has gone down so much. They're feeling like, oh, should I do that now? Does it make sense to invest in U.S. companies or U.S. stocks or U.S. denominated assets? And I get questions about different strategies to deal with currency issues and things like that. And so a lot of times that conversation is revolving around, I'm going to talk about different strategies in terms of how you're not going to reduce your currency risk. You have to manage it somehow. Yeah. So there's different paths that you can go, and we'll talk in a conversation that I've done like that in that area. I've gone through those kind of strategies. And at the end of the day, I'm not telling them, well, this is better than this.
Right.
It's just, here are these options out there that are, that are traditional schools of thought. Whatever makes sense for you in your comfort level, because it's all about comfort level.
Exactly. Yeah.
That would be your path. And so, I get a lot of those. Since the dollar's been going down, I've been getting a lot of those questions.
Yeah, that's fair. That's fair.
Yeah.
One last question before I let you go. Since I know you have a family and you're really passionate about financial literacy, what are some of the kind of key things that you are going to educate your children about so they'll be more informed when they're adults and they'll be able to maybe like tell their friends, and we'll hopefully have a generation, the next generation, and next generations will be a little bit more savvy when it comes to money?
I think that's the key word is just to be more savvy about it. It's about being more engaged in the process. I think it's not just about understanding the mechanics of personal finance. I think it's also understanding your behavior and your attitude towards money, because ultimately your success and your ability to manage money and manage your finances is going to be dictated by ultimately your behaviors towards money. I've definitely learned that, 20 years ago when I started investing, it was all about numbers and quantitative analysis and things like that. I can see now 20 years later that that stuff is still important. You still got to know some math. You got to know some formulas. But at the end of the day, it's more about awareness of biases and behaviors and controlling your emotions and developing a discipline and a rigor towards how you manage your money is ultimately going to put you over the top. And so if I were to, tell my kids that, it would be understand the mechanics of it, be literate from that perspective, but also be aware of your emotions and and develop an internal discipline towards money and a respect towards money. Because money is finite.
Yep.
And it doesn't grow on trees.
It doesn't.
Guess what?
Surprise.
And so you have to have a respect for it. And it's even, capitalism, we live in a capitalist society. The fundamental basis of capitalism is money is scarce. Capital is scarce. And companies and businesses that can manage their scarce capital effectively are ultimately going to be the most valuable companies in the future. And so it's no different from taking that mindset and bringing it down to your own personal situation. And
that is some great advice. Thank you so much for tuning in to episode 27. Make sure to check out the show notes for this episode. All you have to do is go momoneymohouses.com/27. And if you like what you hear, I would really appreciate an iTunes review or a review on Stitcher or just a nice email. That'd be nice. Just saying. Thank you so much again for tuning in, and I will